Hi Ron, Stuart here. It's just gone 5:45 here. Sorry, 5:45 here in sunny London. It's been a nice day today. Blue skies out there, and it's just it's got dark about an hour ago. So yeah, spring is round the corner. Fingers crossed. Hope you're all well. You've had a good Wednesday so far. Let's have a quick run through the markets before we get to the main news of the night. Dollar's been firmer today. I've got a Swiss on there for some reason. Let's move back. Dollar's been a bit firmer today. Let's have a look at the euro. 104.20. So we've had a big move down here for the euro. Earlier in the week, we bounced yesterday, Tuesday, and we're up again today. So the euro's up against the dollar, but the dollar's up against most of the other currencies. But yeah, a better bounce. But the key thing was that 104 was tested yesterday. So the trend remains very much to the downside. Dollar on the front foot. The 20-day moving average now for the euro, interestingly, look where we are now. We're at the top of this little cluster here of candles here from last week, and we're at 104.33 for the 20-day. The 50-day there, as you can see, just breaching through this previous level, the pink level we got on there at 104. 53, so it's under 104.50, or it's approaching 104.50, the 50-day, and the 20-day 104.32. So the trend remains very set. We obviously got buyers down here at 104 yesterday, and we've moved higher again today. Sterling 125.75 has been breached in the last hour or so. So again, similar pattern, less momentum with sterling today. Oh, you can't see my good-looking self, can you? That's a shame. Let's have a look at Uncle Stu. There he is. You can hear my dulcet tones. You couldn't see my good-looking face, but there we are. Here we are. Again, trend continues to the downside. Bit of a bounce for sterling as well, but the shakeout we had on Monday is still, again, another one that's very much set to the downside. 125.95 for the 20-day and the 50-day. Still just above 126, but flattening out. But you can see it's starting to curve. It's starting to edge down a bit. We've got nice angles here on the 20, the 5 and the 9. Sorry, the 9 and the 5 moving averages here. MACD lines crossing all the way back here on the 19th. And sorry, it's the hourly chart. That's why I'm. Yes, you're full. You're full. There we are. So yes, dollar stronger today. So just ignore. I must have had the hourly. See, that's the problem. You not check your charts, you fool. Yeah, there we are. So going back to the euro, we're down this week. So what I said at the top of the shop is correct. We got a stronger dollar today as of yesterday as well. So a rejection of that rally to 105. So just ignore my witterings earlier. But we have been interesting. We have been in to test 104 today. So a big 100 pip move this week down for euro dollar. So dollar a little bit on the front foot. But you can see from the size of the candles, they're not significant. Big rally we had from this big move to 103 for euro, but we still remain sort of edging around. So it's a bit of a congestion zone, a little direction on the 50-day, on the daily timeframes, but obviously intraday we've had a down day. Yen up on the daily time frame, 151.65 currently. Again, short. I can't remember. We got a position, haven't we, on dollar yen? I think we long or short dollar yen. Can't remember. We'll have a look at all that position later on. Oh, here we are. It's stop loss from the 17th. So we were within a smidge of that's right, within a smidge of target yesterday, and we've moved back within it again today. So it's still open. So it's still trugging along. That one still short. Anyway, dollar continues to weaken against the stronger yen at the moment. But again, you can see clear support last week and this week around this 150 above the 151 level, big round number. So we're trying to break this low. So we'll see what happens if that's just a simple retrace of this big leg down, bang. So we were up, down, retrace a wee bit. So yeah, 1, 2, 3, 4, 5 potentially. We'll see how that pans out. There's a big one, isn't it? There's 1, 2, 3, 4. Yeah, it's still moving down, isn't it? That leg's still there. So 150 is obviously the big support area. 151 is where we're looking to get to. We're going to continue to break lower for dollar yen. So dollar up against the other two majors, weaker against the Japanese yen. Dollar CAD 152.40, again better week. You can see demonstrated here, good day today to the upside, but again remains under its 20-day moving average. So this trend is really still in play, although we've come under 142. Clearly buys at 142, this rounding bottom here, and RSI still over, starting in the neutral zone at 40. MACD still trekking down. So we'll see if this just runs out of steam here and moves back down to test the 141 and the 140 level as the February rolls on next week. But again, let's see what happens. Let's see if we're going to move back up to the upside. Aussie 63.45. So we're run out of steam again. This is a long position we'd had from quite a while ago. I think we haven't had it since the 8th. Probably haven't this since the. I can't mark these charts up with all the real trades are over here on this platform. But yeah, it's hit T1 certainly. I think. Oh, that's right. We've dragged up the stop loss on this one, haven't we? Here, there we are. And again, it's gone nowhere over the last couple of days. So I might be looking to close it out if it runs out of steam. Looks like it's run out of steam round about just beyond our first target. So we might close that later on. But we'll see. Still relatively positive here on the MACD. RSI sort of rolled over a bit, but yeah, that's still positive. Right, news of the day, obviously, was the RBNZ overnight decision. Again, very telegraphed. Big 50 basis point cut, as had been anticipated. Nothing in the statement or announcement from the head of the central bank there was really of any surprises. Trying to get the Kiwi economy rolling again. Obviously, significant impact because of the stagnation. Stagnation in China. 20% of exports from New Zealand goes to China. So it's quite not that much. I think it's 18%, something like that. But that's continued to where jobs have been a bit of a sticky point of contention in New Zealand as well. So big move there. And the Kiwi on the back of that, we're back to 57. We did have a this is the daily time frame again. So we've rallied against the US dollar, but as we said, the dollar's come back against the other majors. Counter to the others, Kiwi was stronger against the US dollar on Monday, but we were down yesterday, and it's not really gone anywhere today. If we look at the daily hourly time frame, you see the that was obviously the announcement. We sort of spiked up, but again, a bit like we saw with the RBA last week. During the final part of the Asian trading session and the beginning and the European session, it's given all that back up, and we're back to where we were, and we're sort of pivoting through this 57 area, big round number again, .57 Kiwi. So because it was it was anticipated, it was an expected move from them. The other news this morning was inflation in the United Kingdom. Back, a bit like we saw yesterday, back up. It's sticky, a bit like we saw, as I said, yesterday with the Canadian numbers and the numbers earlier. These are the Canadian numbers yesterday, weren't they? Where's CAD gone? Here we are. CAD hotter than expected. As I said yesterday, it seems to be a growing trend in our industrialized countries. So sticky services inflation remains in the UK, but it's a significant hike up on the annualized basis, the 3% from 2.5% last month. So you just have to walk around the shops and see goods still, things are high. Things have from 2019, pre the COVID, prices are probably 30% above where they were then. So although the rate had started to come down, the rate is now moving up. So it's still quite hot in there. If I just go to Forex, the Forex factory calendar, the other key thing I look at in the UK in particular is the RPI, which is the retail price index, which is a wider measure than CPI, consumer price index, and includes things that unions negotiate their rates with, or landlords or councils price their council tax inflation, or their local taxes, and that's actually also ticked up, not as much as the headline CPI, but 3.6%. So it's still very sticky. The other key one, the most important of these, this really should be read in my view, is that the core number here is jumped 0.5 of 1% in month, so 3.7% for the core CPI. So that's the ones that that really hits consumers and businesses really quite hard in the pocket. I remember we've got a rise for business taxes coming in April, just a couple of weeks, well, 6 weeks away now. So some good news out of the UK, but it's still continuing to be quite weighed down by some of the economic data, and it's the whole outlook seems a bit, it's not just that it's winter, but everybody seems a bit weighed down by the whole grind that's going on here in the UK. But anyway, they were the two big news items for, earlier today. Housing was about in line. The building permits and housing starts out of the US this afternoon. Nothing to report really there. What we've got, so we got the FOMC minutes, right? It's still marked here on this calendar here as a 3 bull situation. Forex Factory still have it as a high. I'll come back to what Trump had to say and Musk had to say last night as well. I mentioned that yesterday, didn't I? I'll come back to that in a minute. High impact event, and it still is, although it's lost its significance really as a sort of market moving event. If we just bring in, so look, everybody talks about gold. We just bring in the gold market, and I'll bring it down to the 5-minute market. It reacts to the minutes probably very little. So we've been down all afternoon. The gold market bouncing off the 50 period moving average here on the 5-minute time. It's a bit of a sticky point there where we've come back to now, where we are now 29.25. So see what happens when the data comes out. So my point really with regard to the minutes is obviously it's backward looking. So and everybody's clear about where they stand on the hawkishness or the dovishness. They're very much an alignment within the Fed at the moment. Powell obviously had his testimony last week, and they're very clear about their wait and see. They're in no rush to cut rates. Many are talking about, perhaps there mightn't even be any cuts at all this year. We'll have a look at what the futures market is telling us from the CME Market Watch in a minute after the data's come out. Just a minute to the data. But because it still holds its significance, because it's what's actually documented, it's what's actually written down, it's what history will tell us what was said, for the January meeting of the Federal Open Market Committee in 2025. When we look back in years to come, historians. So it's quite significant. But I say lots of people have already said what they're going to say. It's very well communicated, very well telegraphed. The other thing as well, they changed the format a couple of years ago about what's actually in the actual content of it. And it's more of a sort of bullet point summary these days to make it easier reading. I don't know, everybody's lost their ability to read stuff, haven't they, in our Instagram life we lead, social media led TikTok world we live in. And so it's just so it's a summary. So again, unless there's some key words that change significantly, we're unlikely to see a major reaction when it rolls off. But anyway, it's they're due, and let's have a quick look. Some of my feeds. I'll get my Reuters feed up in a minute, where it's about to come off. Yeah, lots of discussion about tariffs on banks apparently in the actual meeting. It says strong economy with a solid labour market. I'm just seeing the Reuters headline here. Reuters headline here. Fed can hold policy at restrictive levels if economy is strong. But it's exactly what Powell said last week, didn't he, in his testimony? So again, how that's going to move things is rather negligible, to be honest. There's the 7 o'clock candle. We had been running up, but we'd been down from in the last 15 minutes. So gold's rolled over a bit here. Nothing too significant on that. You wouldn't expect that, to be honest, would we? We'll come back to gold in a minute. We look at euro. 104.20. So it's sort of had a lift in these few hours. We were looking at the hourly chart before, weren't we? So we've moved up from 5 o'clock. This 6 o'clock candle, 7 o'clock candle's just starting now. So we've been lifting up again. Nothing too significant. We'd need for the euro to get some buy. We'd need to break 104.32. That doesn't look like that's as we go into the rest of the day. Vast majority of participants judge risk to be mandate roughly balanced. And that, again, the balance of risk is what Powell said again at his testimony last week. I remember the Fed have this two-pronged mandate. They've got inflation and jobs. Jobs remain remarkably strong. That tomorrow we've got the weekly claims again, and 215,000 I think is due tomorrow. Remarkably resilient. We saw that strong earnings and jobs numbers out of the UK yesterday as well, didn't we? So, but the US jobs market has remained remarkably strong. Some of those signs of it cooling. So the US economy is still the one to look to for many investors. Obviously, we've seen this big churn into European stocks, and then obviously sparked from the defence part of things. We had this massive rally in the DAX in Europe, but still the US stocks remain very much in play. They've had a really good, well, not really good. They've had a better earnings season than many expected. It's coming to an end now, and the earnings are sky high, as many are saying, but it's still forward earnings, that is, and we're still anticipating a strong US stock market through 2025. Obviously hiccups along the way, undoubtedly, with this tariff noise that's still just noise. Remember, the only one that's actually in place at the moment, is the 10% on the Chinese side of things. He's talked about reciprocal tariffs with everybody else that trades with the US, but there's nothing in writing. Obviously, the politics this week has all been about that meeting yesterday in Riyadh between the Saudis, the Russians, and the Americans, actually sitting across from Lavrov. I'm a bit flabbergasted, to be honest. But and then the comments today from Trump about Zelensky. Zelensky's cancelled his trip to Saudi Arabia. He went to Turkey to see Erdogan yesterday. But Trump said about Zelensky today, he might lose his country, talking about him losing the election, another election. They need elections quite quickly. Really, quite provocative stuff. Nothing, obviously, in that tripart meeting yesterday about the oil market, but I'm sure it was kicked around on that agenda just because of the participants that are in there. But yeah, so as far as market moving events concerned, it's a bit of a non-event, the old minutes today, isn't it? So we just go back to the 5 minutes. Euro's sort of perked up a bit here on the 5-minute chart. It has moved a bit higher, but absolutely nothing there, is there? Absolutely bit non-event. And again, the focus remains with the Fed on inflation. We've had the CPI for the US this month. All eyes are now on the end of the month and the PCE numbers, the price per personal consumer expenditure numbers at the end of the month, and that's really what the Fed uses a measure of inflation. So they obviously want to see that starting to come down. But as we've seen from Canada yesterday, the UK this morning, it's not happening. So that might, the idea that we won't get any rate cuts might start to cool a wee bit. Certainly the chatter, I would argue, certainly nothing going to come from the Fed about rate hikes. but the chatter on the fringes of the financial markets, all the creates sentiment, is that might cool as well. But there's always outliers. If we have a quick look at I said I would look at the what the Fed Watch tool on the CME is showing us as far as where the actual futures positions are. This is the July number, so we've obviously got a meeting in March, May, and June, and it's only till we've got to push it. It's pushed out all the way to July before we get some sort of pivot away from more than 50% of a rate cut. So here we got 40. You add these two together. This is where we are now at 425 to 450. So by July, the market is anticipating we will have had a cut. But there's still a 40% chance, 40.14% chance, and that hasn't changed. I don't think. I had this open earlier. By July, so there's nothing really happening. Anticipate certainly not in March or May. June, if we just go back to June, it's still 55% or 54.5% chance of nothing happening, and a 45% chance of some sort of rate cut. Some expect 50 basis points cuts there. Again, it's unlikely unless things change significantly, unless there's some clarification on the impact of the tariffs. But even if if they were announced and are actually in place and they're started, if they get implemented, it's always the logistics, it's always the implementation. It's easy to claim things when you're on the campaign trail. It's quite easy to announce stuff when you're actually in the White House, but then to actually put things in place, get things done, get tariffs applied, get them actually collected, and who's going to collect them, and where are they collected, and who's going to pay for them ultimately. That's always usually the businesses and consumers in the United States. But obviously, he's the art of the deal, isn't he, Trump? So it's all about negotiating a lever as well with him. So again, remember last time, there's a lot of noise, a lot of chaos in his administration. Seems to be a little bit more organized this time, although there's all sorts of stuff is being thrown at the wall at the moment. But devil is in the detail, and if things keep going in one direction, you want to be following it, you want to be adding to your position until it turns around, a bit like we had with the DAX today. So anyway, as far as expectations for US interest rates are concerned, nothing right up until, I said, July is likely, but still this could flip away quite significantly, because we've got it's a fourth meeting from where we are now. Lots and lots of data coming out there. Is the jobs market going to soften? Is the rise in inflation going to start to feed through? What's going to be the impact of the tariffs? And that's why the market sort of, by this time here, the beginning of the end of the summer, you could argue the end of July, things will be much clearer in place. So it might not be any cuts at all for 2025. Huge turnaround in the last 7 or 8 months from where we were then. But anyway, so yeah, euros got a bit further momentum here. Is that the? Oh yeah, this 5-minute chart. So we're literally excuse me, literally less than 10 minutes since the announcement. So dollars cooled a wee bit. Just headline here across my Reuters terminal here saying Fed may need to stall, and that's what that Fed Watch tool is suggesting, isn't it? Here, there we are. We slipped a wee bit, haven't we? 42, 42.9. So it's 53. Yeah, it's cool. It's gone back a wee bit since the minutes have come out. Not much. So obviously data dependent again, but are they overly dependent? Data dependent. The Fed. So it's only 10 minutes since the announcement, but there we go. It's not much of a move. The dollar weakens a tad. Let's have a look at what we did with that gold position. Gold's done absolutely nothing on that. Move flat here on that 5-minute time frame. Even if we go to the 1-minute tick chart, there was the actual news. Sorry, I'm talking about 7 o'clock, wasn't it? So we were down, and it's moved up a tad, but really flat through the news and the announcements. As I say, hardly news, and they obviously, if things start to weaken, they can either hold them here, which is what it's looking like. Still the strength might pull through, and we still might see this the rate cuts actually happening further this year. Certainly, what the president will want. He hasn't really been. He mentioned that he's only really talked about the Fed once since he's been in the White House. So that's probably going to come round onto his agenda again. Yesterday's, we was talking about this this interview they had. Trump, and it was last night, wasn't it? Late last night, US time, early time, GMT, where him and Musk were interviewed on very friendly terms at Fox News, and I saw a clip where Musk was saying, "I've done nothing. I don't do anything the president doesn't want, obviously, and the president's given me no promises or no special breaks." But anyway, it's a bit of a comic event, to be honest. So there we go. So let's have a quick look at what else is going on. So we've been weaker today on the gold market. The other thing I wanted to show tonight was I'm just going to bring up the our Discord group. Do come and join us on the Discord group, guys. This was from last night. I'm going to start posting these more frequently, sort of 10 o'clock, 9:30 time, about scalping type approaches to the end of day. So what this another strategy I have my normal end of day strategy. What this one does is similar, but it just sort of front runs it a wee bit. And so typically, as I've written here, typically I'm out of those trades as soon as I get up, as soon as I have a look at what's happened. Is it going to matter? So let's take this first one, for instance. So we were short Swiss yen from 168.19. We were looking for like 30 odd pips, less than 30 pips. A quick move down, and the take profit T1 here would have triggered if it had been hit overnight when I was asleep, so I don't have nothing to worry about. And same with the stop loss, so I've got nothing to worry about. But what tends to happen is either it gets hit and I'm out, or I'll make a manual decision, physical manual. I'll look at the chart and I'll make a manual decision at that time. So if it's sort of approaching the target and it's looking all quite positive, I'll leave it. If it's had a go, come back, I'll tend to close it. So instead of taking 30 pips, I'll take 5 pips or 7 pips or 10 pips. It doesn't sound a lot, but if you're doing this multiple times on a system that over time works, obviously you have a lot of losing trades, but those 5 or 6 pips, or there's 15 pips or 20 pips, 30 pips, if we hit the full target, they soon add up very, very quickly. Okay. The other thing I did last night was that there was it was a sentiment view as well. So on the oil market and the stock market, I'd had a trigger for the Dow, not the other two, but the Dow. And I actually took UK oil. I normally trade US oil, but it was UK oil. It was UK oil that triggered ahead of US oil last night, and I didn't actually set a target for those two. So the momentum felt like it could move quite positively. So we'll have a look we'll go through all these as well if people are interested. If not, I'll wrap it up now. But that's my approach to those sort of end of day scalping strategies, scalping positions, as I called them. The normal end of day system, I'll still post those as well. Obviously, if you're not interested, I won't. If you are, I will. I've got a message here where I'm general chat. Stuart is on fire. Somebody's saying he's not actually on fire. I don't think he's on fire. No. He's in a good mood because the sun's come out, but it doesn't feel like he's on fire. But anyway, so let's have a look at these. Let me show you one as an example. I said it was Aussie Swiss. Let me show you the Aussie Swiss because that's the first one I did this morning. So we just got the Aussie Swiss, and you see what I'm what I mean by managing this manually. I know a lot of you trade with robots. You don't want to think about your trading. This is fair enough. But I'm old school. I'm hands-on. I like to know what's going on, why things have done what they've done. Have they got to their fib levels? Is it following the rules? Are we above or below my VWAP or my moving average? Or is MACD positive, negative? You know, it's just something I've always done, and I'm too old to change now. They say don't be too old to change ever, but it works for me. It works on my trading time frame, so I'm not going to upset the apple cart. That's, as I say all the time, that's the most important thing, guys, when you're learning to trade as a beginner or somebody that's tried it and failed. You've really got to work on yourself first and foremost to get yourself in the right frame of mind, understand yourself, understand how you manage risk, understand how you deal with losing time after time after time after time. Don't get down, accept losing the money, and just try and bounce back, try and find some other further investments. Anyway, let me I'm dribbling on again. Let's have a look at this Aussie Swiss position yesterday. So it's 5 minutes. We're not 5 minutes. However, it was a end of day. So it's still an end of day chart. So what's the higher time frame trend? Well, it's a long. It should be a long position. MACD's long. RSI is rising. It's 56. It's not massive, but it's 50, 60. That's relatively positive. So what happened yesterday? We got an entry here yesterday. Let me find the which one's this? Aussie Swiss one, wasn't it? Where's Aussie Swiss gone? So Aussie Swiss, we were long from 57.32, which must be this line here. Yeah, 57.32. There, that was our entry yesterday just before close. We got in. Our target, what's the stop loss? Oh, I must have moved it up. Oh, we must have. Right. Sorry. Yeah, this is what I was going to say. So that was our entry. So if we open up, so you can see today we haven't really moved, but we had moved earlier. So what happened was, if we go to the hourly chart. So this is last night when I got in. Where's my entry? So it must have been around about here. 20. Yeah, there we go. 22. So I got filled at this price, 57.30, and I was long. Okay. My initial. Someone that says stop loss. Oh, anyway, were we long? I'm going mad. Yeah, long. Yeah. So 57.60 was the target. Oh, there we. That's the point I was trying to make. Yeah, sorry. All right, so we were long here at 10 o'clock, 9 o'clock, 10:30, whatever it was last night. So we'd run up. I don't get up at 2 o'clock in the morning. I don't get up at 5 o'clock in the morning. I was up sort of round about here. I looked at this just before 8 o'clock this morning, which is when I tend to look about 7:45, 7:30, 8 o'clock time, that candle. So at this point, everything was going fine. Thank you very much. We'd had a nice rally here at 2 o'clock for some reason. Obviously that was the main news. Then was the Reserve Bank of New Zealand and their announcement that lifted the Aussie Swiss. It doesn't matter. I don't care. It's up. And we'd ran higher and ran higher. So I left it. I checked all of them. I scanned through them all around about during this candle positive. And you see the histogram's positive, the MACD light signal and lines are positive. The RSI, I didn't know at the time, but that was still rising. It was just about to hit. Never actually went overbought. It never got into the 70 area, but it was at 60. That was all looking all hunky-dory. I came back around about 10 o'clock. I had some breakfast, walked the dogs, had a little conversation with the boss, and this had happened. It had rolled over. So at this point, I'm trying to lock in the profits from the overnight Asian move. So I'd pulled the stop loss up to here. It was looking okay. I'd pulled the stop loss up to this key area here, and during the candle before I looked back, I'd been stopped out. So I'd made, I think it was 14 pips, was it? Yeah, 14 pips, not the 30 pips, but it was 14 positive pips. Remember last week we lost 200 odd points. So, that sits in your mind still. Week before that, we had a really good week. Week before that, we had a really good week. So we've had a really good start to the year. But last week was a big loser. So we want to hang on to those pips. So that's out because I've dragged the stop loss up because it's a trend following strategy. So you trail your stop loss up. Bang, we were out here at 57.45. And that's what I do as a manual action when I'm trading my real money, my real account on this particular strategy. Okay, so these things I will put up here, guys. If anybody's still listening, where are we? These things I put up here, these scalping trades, they're the ones that I manually manage. Usually, well, it's normally 8 o'clock right now, but anyway, of all of those. So we can go through them all if you want, but you can see what I've done with each one. So that's what I'm not telling you what to do, but that's what I do, and it works for me, and it's worked for me for many years. So happy days as far as I'm concerned. So there we go. That's the scalp. That's explaining the scalping approach to things. We can go through the rest of them if you want. Aussie Swiss came within a smidge. Was it Aussie? One of them came with a smidge of stopping. It looked like it was stopped out, but the spread bizarrely actually kept me in. It looks like on the wick that was Aussie Swiss we were just talking about. Was it Swiss yen? I can't remember now. It's over here on my other. So Swiss yen was the other one. Swiss JPY. Swiss yen. Is it this one? So I've got to there. What was this? This was short. Is that right? Swiss yen was short from 168.19. I might have gone, yeah, there was 168.19 target. Was the target that close? 167.92. Yeah, so that hit target. Must have, yeah, it's hit target. So I don't think I've done anything with that one. I think it's hit target and it's closed it completely. So that's the other thing with although I put T1. If it's hit target whilst I've been asleep, that's it. It's done. I'm out. Obviously, I manage it otherwise. But you can see that's continued to from the. Hang on a minute. What am I talking? It was from last night, wasn't it? So 18th. Why are they? Oh, these are from previous. Sorry. So I haven't actually marked this one up. Swiss yen 160. Swiss yen 168.19. Is where we got in. So it was just about. Yeah. So it was just about here. Swiss yen 167.92. Has that actually hit target? Yes, it has. So it's hit target. But again, I think that one, I haven't marked it on this chart, but again, I think that one just ran through 160. What was it? Oh, God. 167.92. Let me just put a line on there on this one. 167.92 was our target. 167.9. Where's the 9 gone? It was around about here. There's 91 or yeah, 92, 92 something. Anyway, that was the target. Go back to the beginning of last night when we put it on. Must have. Where do we go? Where did I say we got? I got filled. I can't see it. Oh, the other platform's not open. 68.9, 68.20. So it's about here. So yeah, that's right. That's what happened. So this is when we were filled here, and it had run straight through. Before I'd got up, it hit target, so it was out, and we'd bag the profits on that one. Okay, so if it's done that, it's already hit the target, it's closed. If it's a manual position, I'll either move the stop loss down or move the stop loss up or close it if it's gone against me and it's not obviously on the way to a stop loss, but I'll tend to close them out. That's the main message I want to get across. So let's do that again. So those two were successful. I was trying to find a one that missed, but so although it says T1, it's actually a fixed target that closes if it's hit, obviously. If it hasn't been hit by sort of 8 o'clock, 9 o'clock time, I'll make a decision whether to leave it to try and if it's running nicely like the Aussie Swiss was. The Swiss yen actually already hit target. And then let's have a look at these other two as well, the oil and the US 30. There was no targets on this because it felt a little bit different. I took a decision, a discretionary decision. Again, that's one of the things about trading that comes with doing it a while. You begin to. I've lost my. I'm trying to put that down here. Oh, Stuart. that down there, and I want that up there. So you can still see. Are you still with me? I think prattling on a bit while. Whoops. Yeah. So yeah, the other two I wanted to fill before I wrap up, because I've been nearly 45 minutes. I was trying to keep these shorter. The other two we were talking about was the UK oil market. So we look at energies. So it was UK oil, and I've lost my lost Discord group. So let's just go back to oil last night. Well, actually the oil market. So this is UK oil, or Brent, the world's most traded oil commodity. Everybody talks about US oil all the time, obviously, but Brent, UK oil, is the most traded in the world. So bounce a bit like we saw with US oil as well this week. So positive day yesterday from positive start on Monday. And I just thought it would have had a bit more of an impact. Okay, so I could have set the target round about that big thick wall, of the 50 and the 20-day moving average at 76.38. We got in at 75.48 yesterday, which was actually quite. I was down here earlier in the day as we started to move up. So we were filled on this one at 75.48, and that is just that can't be right, can it? I can't. So I got that number right. UKR 75.48. I'll have to double check on my strategy there, but that doesn't look like that was a yesterday close price, does it? Because that's yesterday, isn't it? 18th. This is today. So that I'll have to double check that. Anyway, sorry. It can't have been filled at that price at 10 o'clock last night. That doesn't make sense, I don't think, unless there's a huge difference. With what my trading platform is in this platform, I don't think it's like that. Let's have a quick look. Yeah, no, 40. Let's check. I want to check over here. Oil. US oil, UK oil. US oil. I've got the oil markets mixed up. I think so. UK oil spot. I might be in the spot price yesterday. No, it was yesterday. Yeah, no, yeah, 75.40. Yeah, I was filled at 75.45. So there's obviously a discrepancy between the two, my trading platform and the trade logger platform here. But anyway, okay, that's anyway. The point being was momentum is the whole point of why I've not put a take profit on that. So we could have a big next leg recovery from this fib level here. Sorry, this fib retracement, which is now set because we've tested this floor twice. So as I said yesterday, the even on my strategy as well, that was a first resistance, which is where we are now, but we could easily, rally to at least 50% of that. Not easily, but that's an upside target that I'll be looking for the Brent market to the upside, back to this at least sort of 50% level, 78, 75 is the upside target. But we'll see how it goes. My stop loss is down here at 74. What do we say? It was 74.48. Yeah. So the stop loss is. I'll just mark it on here. 74. 48, round it was 45. So that's a stop loss, and we were filled at that. We were actually filled at that. So this chart's a wee bit odd off, but we were filled here, and we are in the money nicely on that one. More closely, actually, let's do the excuse me, the Dow. So we were short the Dow yesterday here, and we'd been in the money earlier. Sorry, it's the daily. We'd been in the money most of today, and it's turned back on us in the last hour or so. There we are. There's the 4-hour candle. The last 4-hour candles turned back against us, and we're now out of the money. So that might be getting closed shortly from being in the money. As you can see, this morning we were down, or this afternoon we went as low as 44,326 from our entry last night here. So again, that's another one. But again, if you look at the how things looked this morning, everything was hunky-dory. So that was 10 o'clock this morning. I remember I didn't have a target on this one, so we've gone against us a wee bit, but it was running down quite nicely. And I probably should have checked this before I came on here. I didn't. I'd left it because I know the stop loss was there, and I would have. If I wasn't doing this, I haven't been doing this presentation now. I would have probably closed that out ahead of the FOMC minutes potentially. But hindsight is a great thing, isn't it? But so yeah, we've been in the. It's one of those things, isn't it? So we've been significantly in the money all day, and now it's all been taken back against us. So we'll see how we finish up, and I'll let you know later on how if I end up closing that out tonight. I might actually do that because it's supposed to be one of those impulse moves on these short time frames. So there we go, my friends. If there's any questions about that approach or any of my approaches, do let me know. Stick a question in the question box, and I will endeavour to answer for you. If not, have a good evening. So stocks have ticked up on the minutes. Let's have a look if we've seen any major moves. That euro continued to hike higher, 104.27. It has continued to move a bit higher. Let's go back to the 5-minute chart. That's one we were looking at, wasn't it? One we would have traded. So we've moved higher again, and it's taken. There was the announcement here at 7 o'clock here, and it's moved higher for 5, 10, 15, 20, 25 minutes, and it's given a bit of the ghost now. Oh, actually, the other market I wanted to show you today was the rapid sell-off, or the aggressive sell-off we had in the DAX today, having been just go back to the daily time frame. Big down day today for the DAX. Finally getting shook out a bit. Look at this size of the candle today on DAX ahead of the elections on Sunday. The fallout from Riyadh yesterday. It's the biggest down day. Look, since this rally began. So it's the biggest down day for 2025, and it's the biggest down day for a long time. Look at the size of that candle compared to some of the even some of the up days, and that's what tends to happen with markets. We'd had, what's this? 1, 2, 3, 4, 5, 6, 7 consecutive unbroken days moving higher, creating new all-time highs for 7 consecutive. Well, longer than that. These are all new high 7, 8, 9, 10 days of consecutive all-time highs. So it was bound to cool at some point. This is a combination of profit taking. See where interestingly where we are now. The RSI back to just poking out of the overbought zone. The signal, the MACD, K and D lines haven't crossed yet. They're still positive, but the power of the histogram has cooled significantly. Still green, still above the 0 line, but a smaller histogram, smaller difference between the moving average to the K and the D lines. So you can see they're still positive, but it's quite a significant shakeout. So profits taken by many on there. And is this a pivot high? Quite possibly, because that's a significant, as you can see, as I just said, a significant down candle, profits taken, and it's the biggest down day for a long time. I'll actually do the maths. It looks like it's the biggest down day, certainly since September, I would argue, on that pattern. So there's one there in November that looks pretty hefty as well. But I'll find it out, and I'll let you know in the morning about that. But obviously, the DAX is obviously the physical DAX cash market is closed, but obviously our trading positions are still, these derivatives markets are still open. But there's a really good example of the sell-off at 10 o'clock this morning, and we followed the selling gained momentum all day, and it's just finally bouncing now We had a bit of support here at this 22,500 level earlier, but we broke through it on the at 3 o'clock, and it continued to decline into the cash close, and we're starting to see a bit of a bounce at the moment. But yeah, that's what happens with markets. They go up. This is a great example of a strong trend. They go up and up and up, nice and steady, a bit of a retrace, another leg higher, rounded top there, breakout, rally, 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 rally. It's got a bit significantly overextended, as we see here, the RSI, but remains overextended. So technically, again, lots of systems on the conclusion of the cash market today will have decided to close those long positions, certainly. Nothing like a short yet. And the big round support, next big round support was the 22,000 itself for the DAX. So anyway, talk too much as usual. Take care, everyone. We'll see you tomorrow, same time tomorrow, 1900 hours GMT, 7 o'clock in the evening. We'll do a roundup of the weekly claims tomorrow. So just a quick recap, nothing too spectacular from the Fed. And we saw the reaction to the markets. Stocks have ticked up a bit, the word negative, but the main news earlier in the day was the 50 basis point cut from the RBNZ for New Zealand, and a hot reading for inflation, CPI, in the United Kingdom. So take care, everyone. We'll see you all tomorrow for 7 o'clock with a review of the day, and see what else is moving the markets tomorrow. But Philly Fed and weekly claims tomorrow. Take care, everyone. All the best. Good night.